Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about ASGN INC quarterly report. ASGN Incorporated offers a diverse range of businesses and services across two segments, commercial and federal government. Key services include IT consulting, digital marketing, permanent placement, workforce mobilization, cloud solutions, data and analytics, cybersecurity, artificial intelligence, machine learning application, modernization, science and engineering solutions. These services cater to both commercial and government sectors in the US, Canada, and Europe. The crash of ASGN Inc.'s stock price. A confluence of factors. ASGN Inc.'s stock price has plummeted by over 52% in the past year, driven by a combination of disappointing financial results, cautious outlooks, and analyst downgrades. The company's full-year 2024 financial report showed a decline in revenue and net income, while its Q3 2025 earnings release revealed a decrease in net income and a conservative forecast for the fourth quarter. Multiple analysts have downgraded ASGN Inc.'s stock, citing concerns about near-term demand, risks to federal government consulting revenues, and the impact of AI on the staffing business. The company's reliance on contract labor also exposes it to various operational risks that could erode profitability. The broader industry is facing headwinds, with companies prioritizing internal productivity improvements using new technologies. This has led to weak demand and declining earnings, posing significant challenges for ASGN Inc.'s near-term performance. As a result, the company's stock price has crashed, reflecting investors' concerns about its financial health and future prospects. The primary drivers of revenue growth or decline. The financial summary reveals that the primary drivers of revenue growth or decline vary across segments. In the commercial segment, consulting revenue is a significant contributor to growth, increasing by 15% to 18% year-over-year, YoY. However, assignment revenue in this segment has experienced a decline of up to 14.4% YoY. In contrast, the federal government segment has seen mixed results. Time and materials (T&M) and firm fixed-price contracts have declined by 9% and 10% YoY, respectively. Meanwhile, cost-reimbursable contracts have shown a modest increase of 3% YoY. National security revenues have also increased, although the exact percentage is not specified. The overall total revenue has experienced a decline of up to 1.9% YoY. The commercial segment's consulting revenue stands out as a primary driver of growth, while assignment revenue and certain federal government contracts have contributed to declines in revenue. Net income and profit margins decline in 2025. The financial summary reveals a decline in net income and profit margins for the company in 2025. Net income decreased by $9.4 million, minus 19.8%, both quarter-over-quarter, QoQ, and year-over-year, YoY. The 3 months ended September 30, 2025 saw a net income of $38.1 million, down from $47.5 million in 2024. Similarly, the 9 months ended September 30, 2025, reported a net income of $88.3 million, down from $132.8 million in 2024. Profit margins also declined across various categories. Gross profit margin decreased to 28.6% from 29.1%. Operating income margin dropped to 5.8% from 7.6%, and net income margin fell to 3% from 4.6%. However, the consolidated gross margin increased due to an expansion of gross margin despite the decline in net income. The reasons for this decline are attributed to several factors, including a decrease in stock-based compensation expense and an increase in tax withholding on restricted stock vesting. Additionally, the loss of certain higher-margin contracts contributed to the decline in profit margins. The company is generating a significant amount of positive operating cash flow, with a net cash provided by operating activities of $225.6 million in 2025. This indicates that the company's core business operations are producing sufficient cash to cover its expenses and investments, positioning it for long-term financial stability. The company's debt level has increased significantly over the past year. Long-term debt rose from $1.0335 billion to $1.1657 billion, while total liabilities increased from $1.6523 billion to $1.8672 billion. However, interest expenses have shown mixed results, with a decrease of minus $1.4 million for the 3 months ended 2025 and minus $1.6 million for the 9 months ended 2025, but an increase of $1.4 million from $16 million to $17.4 million on page 22. The company's financial performance varied across different segments and regions. In terms of segments, the commercial segment was a mixed bag, with the consulting segment performing well, up 17.5%, but the assignment segment underperforming, down 13.2%. The federal government segment also struggled overall, with only the national security segment showing growth. Regionally, the Department of Defense and Intelligence agencies stood out as a strong performer, with revenues up $141.5 million in Q3 and $433.2 million in YTD. In contrast, national security and federal civilian segments underperformed compared to previous years, with revenues down $8.6 million and $14.1 million, respectively, in Q3. Management is optimistic about the company's outlook, citing a strong liquidity position that will enable it to meet its financial obligations. Additionally, they are exploring new accounting standards updates, indicating a proactive approach to maintaining transparency and compliance in their financial reporting. This suggests that management is focused on ensuring the company's long-term stability and growth. The company's financial activities in recent times have been marked by significant acquisitions and divestitures. Notably, a major acquisition was made with the purchase of Top Block for $306.1 million. This transaction is highlighted on page 26 of the extracted summaries. In contrast, there were no recorded divestitures during this period, indicating that the company has focused its efforts on expanding through strategic acquisitions rather than shedding assets. The company's financial summary reveals that it has engaged in share buybacks as a strategic move to boost shareholder value and potentially increase earnings per share. This decision indicates the company's confidence in its future prospects, allowing it to repurchase its own stock rather than distributing profits through dividends. That concludes the financial summary for ASGN INC. Feel free to comment below, and I will be happy to answer them when possible.